it was clear after the CFTC let multiple deadlines go by on their last proposal for the election contracts that they were not going to get approval, but they did have the option of basically allowing the issue to just lie in kind of an indefinite stalemate. But it was really Kalshi that made a choice to disrupt that status quo and basically first of all, revise their contracts along the lines we talked about, and then self-certify, which is what kicked off the next review. So the first question I have for you is, why do you think Kalshi didn't just allow the issue to sit, wait for a new political regime to come in? Why do you think that they pressed forward when they clearly didn't have the votes?
I suspect some of it was the guidance they were receiving, and also just the tech culture of move fast and break things. If I had to pick, sort of one or two specific reasons, I want to say they withdrew the original proposal on May 12th, and then resubmitted the new proposal within 30 days. So clearly it was something they'd been thinking about for a while and had drawn up. It does a lot of what they have done doesn't make sense to me and my background, but they are very smart people. So I assume, given the information they had in front of them, they thought they were playing, the best hand they had.
So one question, and maybe we can, maybe through the FOIA process, we will get an answer to the question, but they revised the proposal, like you said, in May, basically, and they pitched it as being responsive to the feedback that they had gotten on their first proposal. And so we've covered in previous episodes precisely what the changes were, but the big picture is basically that they tried to answer questions about making sure that these markets were used in a hedging way, that they would be less susceptible to manipulation, all these kinds of things. But when you look at the specificity of some of the changes, like the amount of money for hedging and so forth, I think that one question that I have is, do you think that they were responding to guidance from specific private meetings at the CFTC, or do you think that they applied their own analysis to all the disparate feedback and tried to make an educated guess on what might get through to the CFTC?
I assume it was a mix of the two. I mean, they had to have been meeting with the CFTC and been getting some sort of feedback, even if it was a wink or a nod. And then again, they have a team of lobbyists who've worked the CFTC. So I suspect it is a combination of the two. What have you heard in DC?
Well, I don't. I mean, the whole thing's baffling, right? I mean, we'll get to the Kalshi's decision to sue, but I think the point is that the first question that I think demands an explanation, and we don't have one clearly. I think only ultimately the senior leadership at Kalshi really knows. But I mean, in our community, there is a sense that the CFTC and Chairman Benham is the big block here, that they are the ones that are the problem. They are the ones impeding the development of the space. Now, there's some truth to that, but in light of the opinion that came from the CFTC, and we'll get into it, which was a near unanimous rebuke of basically every argument that Kalshi brought to the table, if that was the mindset and the prevailing view at the CFTC, both at the commissioner level as well as at staff level, what looked in October or November like a rejection of Kalshi, in a sense, was a real gift to Kalshi in a certain sense, right? Because if you're in Kalshi's position, like, I would think you'd much rather be in a position of just saying, we applied, our application is pending, there's no formal decision, and then you just kind of wait out the clock, because I mean, you could have a change in leadership at the CFTC anytime. I think Kalshi knew they had that option because, I mean, all you had to do to exercise that option was not do anything. Instead, they went forward. And so I think that there are maybe one of two explanations here. One is that, again, they misread the situation at the CFTC, or there's some other calculation at play here that they knew they were going to get rejected, but they thought it was in their interest to proceed anyway and get the formal rejection. I mean, do you agree with that framing, or
I would agree with that. I would just
Yeah.
add, they also have investors, and their investors, want to know why they're not growing faster. Like, regardless of how successful they are and how far they've gone, I assume they have investors in the background pushing them to do more, to go faster. What
Okay, I want
when
to,
you
yeah, go ahead.
Oh,
No, no.
please continue.
What I was going to say is on a recent episode I did, I mean, I laid out some potential arguments for kind of explaining Kalshi's regulatory approach. But since I recorded that, I've kind of been thinking that I have another theory here that I want to float by you. I'm not sure if I'm right, but I want to throw out the argument and see what you think. I think that I actually think Kalshi did know they were not going to get approved. Um, just because, how could they not? Because even before the opinion came formally, I mean, as we've discussed, Chairman Benham was giving interviews, introducing this new argument about uh, election fraud and all that. And although I don't think Kalshi knew the extent and severity of the blowback that would come in the comments period, but I can't imagine they thought they actually had the votes. So I think that the point you made on the investors is actually the key to unlocking this mystery. I think what's going on is that Kalshi, they're on paper a for-profit, like venture-backed company, but I think they're operating with the incentives more of an expensive philanthropy. And here's what I mean by that. That I mean, Kalshi just has an absolutely enormous amount of money that they've raised from some of the wealthiest, most prominent investors. And so the question is, okay, how were they able to raise this much money? And the answer to that question is basically that they weren't pitching that they were just going to create predicted 2.0 that would be like a little bit faster, better technology or something. They weren't even really arguing that they were going to build a prediction market that would have legal certainty. I mean, they were basically pitching the idea that they say it themselves that they're building the next New York Stock Exchange, the next Chicago Mercantile Exchange. And so then the question is, okay, how do they get buy-in for an idea this big? And the answer is, okay, number one, they're smart and everything about them screams competence. So in those circles, like it's not that hard of a sell of them personally. But the second is that, okay, people in these circles just kind of like prediction markets. It's an idea that they want to support. But the third, and this is really the key, is that any investor reluctance they were able to overcome by saying that, you know what, unlike all these other people that have tried, we have figured out the regulation. And what's the evidence we figured out the regulation? It's that we've secured the no action letters from the CFTC and we've gotten DCM approval. And so this entire project, the promise, the fundraising, it all basically relies on them selling the narrative that they have figured out the regulatory approach here. And so now that they're in this situation, they have now gone all these years later as a company. They don't really have product market fit in the sense that they don't have liquidity. They don't really have a good user interface. They don't have community. They don't have a good content. Like they don't have any of the stuff that you need to really build this thing. So the only thing that can kind of keep them afloat, have the money keep coming in, is that once a month, once a quarter, whatever it is that their high profile investors decide that they want to, are reminded of Kalshi and want to check in on how their investment's doing. I think the Kalshi team basically needs to have some plausible explanation that they can take to their board, they can take to their investors that say, we have told you right from the beginning that Kalshi is regulated. The core of this business is getting the regulations right. And we are doing everything in our power to figure out the regulations. And this is what we're doing. We submitted a new application. We took the feedback. We're meeting with CFTC people. We have all these people on retainer. And now that they reached the decision, we are suing the CFTC. We're charging full force. I know it's tough, but we're doing everything in our power. And so I think this is all about assuaging investors, keeping the money coming in, just buying time to figure out how to build the rest of their business. I don't even think at this point it's about actually winning in the political or legal process.
No, I mean that is a highly plausible scenario.